Please remember that nothing we say here should be taken as personal advice. The conversation is for entertainment purposes only. If you have questions about your financial situation, please talk to a licensed financial advisor. All right, welcome to another episode of Future Money, where we talk about the technologies of the future
that will make you money. Well, hello.
Well, Happy New Year to everyone. I think you're allowed to do Happy New Year until January 31st.
Yes, I think so.
I think that's it.
I think so. We have Pedro Palandrani. I think got it right? Very good friend of GK. Head of research of Global X and thematic investments. Pedro has been at Future Money before. I think we have a tradition of having him here at the beginning of each year. And
Pedro, hopefully you bring us some better luck this year.
That's a plan.
You mean the market going down is his fault?
I didn't say. I just said hopefully he brings us luck. Okay. I didn't blame him. I mean, you did, but I didn't.
I actually listen. We talked about lithium last year. Had a fantastic year. I think one of the few things that went up last year. So there goes that.
Yeah. Listen. I mean, the ETF. I mean, certain parts of lithium went up. Miners mostly.
Yeah.
But no. Thank you for joining us, Pedro. Your guys' insights are always great. Some of the best, honestly, analysis of markets and technologies in particular come from Global X. So
yeah, you guys do this charting disruption presentation every year, which I think in our business probably one of the best piece of research that comes out, especially in the themes that we like: sustainable energy, genomics, biotech, Web3, and so forth. And obviously we lean on you a lot for your research, and we own some of your funds. So maybe give us a little bit of kind of presentation of Global X for people that don't know what the company does, and a little bit of who Pedro is. Sexy accent.
I said that last time too. By the way, I definitely like the accent.
I think I remember that.
I just have a boring American accent. Maybe I should use my Israeli accent.
Yeah, well, guys, thank you so much for having us again, and for having me today. Again, I'm a director of research here at Global X ETFs. I do focus on everything related to thematic investing, everything from robotics and AI to lithium and battery technology, like you guys just mentioned, metaverse, and so many other areas. And of course, we have a team of research analysts that are really the specialists in many of these different themes. Here at Global X, we have 36 different thematic funds, the most comprehensive suite of thematic ETFs here in the United States. And we've been a pioneer in the thematic ETF landscape. We launched our first thematic ETF back in 2010, specifically the lithium and battery technology ETF. So it's been a long time since we brought to market that strategy. A little bit more about Global X. We, again, purely an ETF issuer based out of New York City. We manage over $40 billion in assets under management. We've been growing our exposure internationally, now with offices in London, in South America, in Asia as well. And beyond thematic, we're also very well known for our cover call suite of ETFs. We have commodities ETFs as well, things like copper, uranium, silver, gold. So definitely a very robust suite of ETFs. That's a little bit about me and a little bit about Global X.
That's awesome. Yeah, again, big fans of some of your products, and thank you for coming on at Future Money. We definitely want to make money this year, so we
help us.
It's been such a rough. It's been such a rough year, and whenever you go through tough times in the markets, people seem to forget that, markets will go back up again, So, and times like last year or times like now are really present some fantastic opportunities, right? So the idea here is really kind of for us to talk about some of the themes that we think are going to really do well over the next few years, and really emphasize why that is, and why we need to double down, basically. So let's get to it. Disrupting the charting disruption is really kind of a piece about new technologies and areas of innovation that, we're going to see a lot of growth into, right? And you guys broke it down in 4 different pieces. One, start with biotech and healthcare. I would love to start there, because we just had a pandemic, right?
We just had one.
Yeah, just
I feel like it's still around.
Yeah. No, it's over, man. It's over. I'm done. It's over.
My remnants. This cough, by the way. Sorry, everybody, for my coughing.
Yeah.
It's still the remnants of our pandemic that I got a couple weeks ago.
Yeah, but the conversation was, it's how amazing that we had a vaccine in 8 months from the minute that we discovered this new virus, and that's because of mRNA technology, right?
Yeah.
So maybe start there. Let's talk about like the mRNA technology and obviously China opening and so forth. Maybe tell us a little bit more about what's happening there. What are some of the new technologies that have been used, such as CRISPR, genomics, and so forth?
Yeah, sounds like a plan. I totally agree that everything healthcare innovation related has enormous potential, and clearly after the pandemic, things accelerated. I hate to continue to use the word acceleration, but the reality is that that's the case, right? For us, we really saw during the pandemic that the use of these technologies can be very powerful, right? And certainly it felt like an overnight success, but we really waited so many years for these technologies to really take off. And what we need to remember as investors is that, mRNA vaccines and so many of these other technologies are not one trick pony, right? It's not only about the pandemic. It's not about COVID. It's really about treating so many other types of diseases. So you can see companies that really develop this type of vaccines during COVID now trying to bring the same technology to other types of diseases. For example, trying to treat RSV. RSV is something very common in children and babies. And now we're implementing this type of technologies to really treat these very common diseases that have been with us for so many years. I think within this chapter of charting disruption, there are a couple things beyond mRNA vaccines that really caught my attention, and probably some of the key insights that we have on this piece. One is really around liquid biopsy. If you think about it, guys, like 75% of the cancers are detected when a patient is essentially starting to show symptoms, right? So liquid biopsy can really change these dynamics. It can essentially start detecting cancer at very early stages, and we know how powerful that could be to really start offering therapies and treatments to patients. Another great piece of information that we just found out actually a couple of weeks ago at the JP Morgan Healthcare Conference is that companies like NVIDIA are even becoming players in the healthcare space. For us that follow NVIDIA for a long time, this might sound like a little bit out of the woods, but like NVIDIA is using their technology really for AI drug discovery. Just for context, 80% of NVIDIA's revenue from healthcare solutions came from robotic solutions and X-ray imaging. Now in 2023, the company expects that around 50% of the revenue from the healthcare vertical is actually going to come from AI drug discovery solutions. So I think, again, we're seeing so much innovation in the space, and it's one of those thematic opportunities that are very early in the stages of adoption.
It's awesome. You never think of, NVIDIA, really chip processing and visual processing company being such a big player in healthcare, right? And AI, and this is a new kind of avenue, right?
And the tech companies have all gotten into this space, right? And in a different way. And you don't think of AI when you think of like medicine, right? But ultimately, when you go to a doctor, you can go to 7 different doctors. They'll all ask you the same questions and do trial and error on every single thing. So having AI assist that kind of stuff could definitely be helpful.
So going back to this liquid biopsy, so basically you're talking about tools to be able to do some early detection of anything from cancers to Alzheimer's to really anything that people may have or will have down the road, and using AI to be able to do that, right?
Absolutely. So again, if you think about it, it could be like just in our annual health checks where, again, we use the technology liquid biopsy to really detect if we have any sort of cancer, and trying to detect that on the early stages of the cancer, like just the survival rates really increase significantly once that type of technologies are in place. And we have so many companies in the space. You can think about Garden Health, one of the most known companies here. Illumina, of course, having the highest market share by far in terms of gene sequencing, and also like trying to get into the liquid biopsy space. Invitae, Neogenomics, Roche as well, one of the large pharma companies. So there are a lot of players here, and I think it's going to really be a very large total addressable market. Actually, we estimate that this market could have really around $80 billion of total addressable market, maybe a little bit more if there are a couple of verticals that develop more. But again, the opportunity from an investment standpoint is really there.
At the risk of boring people to death, I'm going to share this slide that you guys did, which really has all these companies and kind of where they are and what some of the tools that they have. But it's really fantastic. There's so many players in so many stages also of detection, right? And different ways of doing it. So I don't know how our healthcare companies, like your primary care doctors, your insurance companies, are they really adopting these tools? Because for me, that sounds like it's fantastic. Or do you have to go to a special doctor to get all these tests done?
The pricing point here for many of these technologies, of course, not only liquid biopsy, which still has to develop considerably over the next couple of years, but the pricing point for many of these applications still relatively high, right? So I think that's one of the biggest constraints, and potentially something that will drive further adoption over the next few years, right? We've seen historically the case where just the driving down the cost of these technologies really drives adoption significantly. So commonly you're not going to go to the doctor and really get like liquid biopsy done every single time, but again, hopefully in the future, as the costs come down, we'll see that being applied on kind of the most recurrent and kind of annual checkups that we have at the doctor.
And I think with healthcare, it's sort of two things. It's the cost of it coming down, but also as hospitals realize more and more that prevention of these diseases, right? There's always this curve that happens where hospitals have to adopt the idea that you spend a little bit more than you would now, but ultimately that's going to save them a ton of money over time by preventing and not having to treat diseases like cancer, which can cost millions of dollars in treatment. So I think there's sort of this inflection point generally that happens when both of those two meet.
Yeah, I just listen. There's a term that goes around called biohacking. I'm sure you guys heard it. So I kind of hate the term, but it's because it sounds cheeky, But among some of the people that I hang out with, and it's really kind of prevalent. Like people are trying to figure out different ways of longevity. I'm 44 years old. I think you start thinking about some of those things, right? How do you become, more in tune of what's going on with your body, and how do you optimize things, and how do you do things better, And I mean, all these tools, I think, will have massive traction going forward.
Yeah, the biohacking thing is interesting. I don't know when we're gonna crack that, but it is interesting. When I did read the what was it called? It was the biography of Jennifer Doudna, the woman who
CRISPR.
The CRISPR technology is Codebreaker, I think it's called. And they talk about one of the parts of they talk about biohacking also, and it's basically like the era of personal computing for biology is coming in the next 20 years or 30 years or whatever it is. And like this sort of mRNA CRISPR thing was sort of stage one. It's almost like the first PC that came to people, right? Before that, NASA used PCs, like all this stuff.
So the idea for you to basically reprogram some of your cells to optimize them for whatever.
And again, whatever, that sounds great and it sounds fun, and I don't know how realistic it is, but I thought the analogy to like the PC adoption over the next 30 years for individual personalized health is super interesting.
Yeah. It's wild. It's wild.
The other question I have though is a lot of this stuff sounds amazing and sounds great. It just sounds kind of like a science fiction movie, a lot of it. Like, how do we, like, companies that like Invitae and CRISPR and these companies, like, they're not making money or far from it
for a while.
Yeah. So like, at what point did these actually become an investment and not just some pie in the sky speculation?
It's always been the case where, a lot of these genomic companies are perhaps pre-revenue companies, or to your point, like, they're not profitable yet. I think that's the common characteristic by looking at the financials of these companies. Yet, we've seen that being the case in the past as well, during, the late 90s, as we saw like the rise of many internet companies and .com companies that, many of them were not profitable whatsoever, or again, were pre-revenue companies. And then the sector, the theme evolved over time to really bring to market those winners, those companies that actually have great products, great solutions. And at the end of the day, we do see the path to profitability in many of these companies. Again, I think that we're just at so early stages of adoption that it's just a common characteristic to see, right? This is not the case if you look at other themes like, I don't know, social media, where clearly now we're looking at kind of profitability, free cash flow, and other metrics. But I think in genomics, so early days that for me as an investor, I think it's not something that I'm going to look at profitability. I think it's something that we can sacrifice given just how much growth potential there is ahead.
High risk, high reward.
100%. And also you can look at companies like Illumina, right? Which is really about sequencing.
Company,
about sequencing. They're making money, but
they've been in business for a long time.
Correct. Yeah.
But Illumina is a great company, and their gene sequencing, obviously last year, anything that had a growth moniker attached to it just got taken to the woodshed.
Yep. And again, that's where the opportunity is, right?
Yeah, for sure. But it didn't matter if you were Apple or, obviously some got hit harder than others, but but there are opportunities now. The question is in the new paradigm of inflation and, higher rates, how do these companies fare? And I don't think we've seen that in a very long time.
I think that's why you're seeing a lot of emphasis on what's your runway? How much money do you have on the books? Can you sustain? Can you survive if things are tough for 18 months or 24 months, right? But companies like CRISPR and Invitae and so forth, they have so much IP and they've done so much, even though they're pre-revenue, they don't have a lot of revenues. I think the technology has been proven. And companies like Moderna, who started 10 years ago, as you said, doing cancer detection at the time, pivoted into vaccines, did $24 billion in revenue last year, and now they're doing RSV, and then maybe going back to cancer. I think that's a story that really we can get behind.
Sure. Yeah.
Nice. Perfect. So this is a really, really awesome area. Again, it's super interesting to me personally, to a lot of our clients, and also opportunities are abound. But let's move on into
one of our favorites.
One favorite, which is clean technology and green economy, right?
Yeah.
It's unequivocal that global warming is man-made, right? Some people try to say it's not, but I think at this point we know it is.
I know most people, unfortunately.
Unfortunately, we're going through so many storms and fires and tornadoes, and really the impacts have been insane on the insurance industry, on human lives, on really the globe. So I think everyone is buying into the fact that climate change is really something that we need to basically battle, right? So
again, the people who are listening to what's actually happening and watching what is happening in the real world, and not just saying, oh, it's just something the liberal elites are making up for. Which I don't even understand the motive, but okay. But no, it's definitely climate change, and obviously we're big investors in climate change, be it with electric vehicles or solar.
Yep.
So we all know Tesla. We all know their
Yeah. So before we go into the names and like the different technologies, because I think really what technology is going to be the reason why we're going to beat that climate change. I have no doubt in my mind.
Yeah.
But let's demystify the word ESG, because there's a lot of negative connotation around ESG. That is states that are actually trying to take money out of companies or out of funds that have ESG next to their names. Larry Fink now is somehow the devil for using ESG. So maybe talk to us a little bit about what's the institutional view there. Are people taking money out of Global X because there's an ESG connotation? Like, what's happening there?
No, that's a great way to start. Really, I think actually, money goes into many of these areas that are like ESG related. But let's be honest, like there's a lot of ESG greenwashing out there, and we've seen that with companies like Tesla, for example, that have a very low kind of rating or factor screen on many of these ESG metrics, and then fossil fuel companies have a very high or positive rating. So I think that's a reality, and that's something that I think we as investors, we need to address. We need to really take a nuanced approach to trying to understand kind of really the net impact that these companies are going to have for, again, to fight climate change. And I think in the case of Tesla, it's pretty clear. It's going to help us to address a lot of the greenhouse emissions that actually come from the transportation sector. I think no one can really argue that. And I think that's, again, something that it's really important to keep in mind when looking at many of these investment opportunities. Here at Global X, again, we do have kind of our climate change suite of thematic ETFs, everything from wind, solar energy, renewable energy, all combined, clean tech, again, or lithium and battery technology ETF. So there's so many different ways to slice and dice this space. The reality is that we don't have any ESG factor or overlay factor on top of these portfolios and funds, because again, the reality is that if we were to implement, say, an ESG screen on lithium miners, it's likely that we're going to end up with zero lithium miners, right? And that's not what we're trying to do here. If we take a holistic approach to understand the contribution of lithium to the overall fight against climate change, I think we can all agree that lithium is going to be critical to really get to kind of reach all of those net zero targets that are in place by countries and companies.
I'm glad you used that, because basically the moniker itself, ESG, is just a bad thing, but the actual companies, the essence of what we're trying to do here is really what's important. We have to focus on that. I think that's what at GK here we think of impact investing. We invest in companies that have an impact. And to go back to Tesla, by the way, they rate very high on governance, which is the G part.
So I want to be clear that ESG, for those who don't know, because we've been throwing it around, it's environmental, social, and governance.
Yeah.
So if your governance, Elon Musk, is not the greatest, and you're sort of bored and everything like that doesn't rate very high, you get a very low ESG score.
Yeah.
But I think everyone can agree that having Teslas on the road versus having, trucks, burning at 8 miles per gallon, is much better for the environment. So there's ESG, there's SRI, right, socially responsible investing,
right,
quote unquote, and impact investing, and that's what we like to talk about more, which is impact investing. Like, what are the investments actually doing to impact the world around us?
Right. And I really like the fact that you guys don't have that ESG overlay, because that's, I think, as you said, greenwashing. It's lazy. It's like, trying just to kind of do something. Okay, this is good, we're going to invest in it, and all you don't really understand what's underneath. Right?
Yeah, well, like for an example, you get credit for increasing investment in greener technology, so to speak. So if you're ExxonMobil and 90% of your business comes from fossil fuels, but you increased your green investment by a couple percent, now all of a sudden you have a higher ESG score,
right?
But you're still 90% of your business. Again, I don't know these numbers, I'm just throwing them out.
Right.
90% of your business is still climate changing materials,
right?
Essentially.
Yeah. So let's talk about that. Let's talk about maybe the 2 or 3 themes here that I think we're super excited about. EVs obviously being the number one. I don't know if this was it's a by chance that we're doing this on Tesla's earnings day. I think Tesla has.
Oh yeah, that's a good point. Tesla's earnings.
Tesla obviously has been in the news a lot. It's down 60% last year. For a lot of reasons. Some of them are self-inflicted, and some of them are just market reasons. But I think the biggest news last week was 6% of all cars sold in America were EVs.
Yeah.
Right. That's a double what they used to be last year. So I think the story, I listened to our podcast from last year. We talked about that adoption number. And I think that story is playing itself out right now in front of us. And I think it's the most exciting story.
6% in the US, 10% of the world, I think.
Yeah. 25% in China.
25% of China, which is crazy. We know China's the biggest market in the world. So yeah, good.
Let's talk about that. Let's talk about the adoption charge in the TAM, because I think that's really, really what people don't think about as much.
Absolutely. And yeah, just for context, finally we hit that double-digit percentage penetration around the world, like you guys just said. By the end of the decade, we could be looking at anywhere around 35% penetration to 45% penetration rate, really depending on multiple factors. But the reality is that, EVs are here to stay, right? If you look at countries like Norway, for example, more than 70% of total car sales last year were EVs. In Sweden, we're talking about close to 50% penetration rate. So again, EVs are here to stay, and we're just going to continue to see that adoption happening over the next couple of years. And that's because we as consumers are definitely starting to adopt electric vehicles. A lot more innovation continues to happen, especially on the battery technology side. And policies and regulators continue to support this adoption, right? Last year, we saw the Inflation Reduction Act it really allowing consumers to now use, again, the $7,500 tax credit for new EVs. Now there are even tax credits for used EVs. Tesla also can apply again, or buyers of Tesla cars can apply again the tax credits, because the previous threshold was completely eliminated. So I think there are a lot of incentives and reasons to believe why electric vehicles are here to stay.
Hey, let's put this slide up. Talk about like this adoption, right? How many share of cars that are EVs? It's really amazing, how technology works sometimes, right? Like it takes a while for adoption to happen. Then once it does, it just increases drastically, And I think Tesla
critical mass.
And also now we have, I don't know, 50 models from other companies.
There's so many EVs now that
right.
my brother who just bought a Tesla actually looked at. I can't even tell you. Every other day I got a message from him about a different model of a different EV. And ultimately, while he was deciding, Tesla decided that they were chopping their prices. So that made his decision easier to come to the mothership.
Yes.
And one thing that it's so important to mention is that this is happening, like just for context, right? 10 million EV sales last year, up from 6.6 million EV sales last year. If you look at slide 81, you can actually see that piece of information there. This is happening at a point in time where traditional internal combustion engine
380 slides, by the way, in this presentation.
I call it a dissertation, not a presentation.
I know. Again, we overdid it last year, but certainly, again, if you look at ICE sales, internal combustion engine sales last year, 4% decline on a year-over-year basis. So I think that's really important to keep in mind, right? And especially in 2022, where a lot of the macro conditions were not favorable for many different reasons, EV sales continue to show that very powerful adoption, and that's really kind of the type of trends that we try to capture with our thematic investing solutions.
So let's talk about what you talked about, which is the government subsidies, right? Like this IRA and Inflation Reduction Act that the U.S. has done. I know a lot of people in Europe are pissed. I think Macron and the Scholler, the German chancellor, met last week in Paris to come up with a kind of an equivalent of that. But the reality is that basically there is this war towards kind of adopting all these kind of new incentives to allow for these industries to really kind of grow, right? China was first. Now the US have these $7,500 incentives plus a bunch of other incentives for batteries, and now Europe is going to do the same thing.
Yeah, I mean, listen, this is ultimately what it takes. Going back to the EV adoption, I do think the price of gas this last year helped the adoption also. Now you add tax credits, Tesla reduces their prices. There's 50 other car companies adding EVs. In the end, most people make a decision by economics, and not because they're trying to change the world. And not to say that most people don't want to change the world for the better, they do. But when I look at a car and I say, hey, it's $40,000 versus $50,000, but I have to pay $400, $600 a month in gas, and I'm emitting carbon, and I'm doing bad things, and I get technology in my new car, and now I start to say, okay, well, why would I buy an ICE car? What's the point now?
And if you live in Paris, you can't even drive into Paris in 2025 if it's not an EV car. So
2025?
Yeah.
Wow, Paris.
2024 diesel, you can't drive into Paris.
Paris getting after it. Good job.
Yeah. No, this is awesome. And I think, listen, I'm a pro free markets through and through, but I think we needed this help to happen. And the fact that Tesla reduced their prices to 55,000 and below is really to take advantage of this tax credit at the end of the day. That's what would happen,
Sure. There's no question. But that's ultimately what the government is supposed to do. The government is supposed to ally itself with things that are right for people. And they're not a business. They shouldn't be bickering over nonsense like this. If you listen to anybody who understands anything about the world, climate change is real, as you said it. So we got to do everything we can. Because I think what you said, and I say this all the time, humans have the ability, in my opinion, to out-engineer our problems. The question is are we going to do it in a timely manner where we have enough time to out-engineer this problem?
I'm an optimist.
I am too.
I'm an optimist.
I am too.
I don't think it's we're that far out.
I always look at it as when push comes to shove, we make it happen, right? You think about World War II and the Manhattan Project, right? They're like, listen, guys, we got to figure this thing out, because if we don't, we're gonna be in really big trouble. And it came out in a year, something that the German scientists could figure out for 6 years.
Besides EVs, climate tech, what else? Smart buildings, something that we're talking about, but also solar.
Let's talk about nuclear, since I just talked about the Manhattan Project.
Oh, that's right. Okay, let's do that.
Yeah, absolutely. Well, we have a uranium dedicated section within the overall deck. I think if we think about nuclear, it's definitely starting to be top of mind for investors, especially after 2022, where all of a sudden the war between Russia and Ukraine really pushed European countries to look back at nuclear as a potential solution for kind of the energy crisis that they were facing. And I don't know if you realize this, but last year, if you look at the EU green taxonomy, they're actually classifying nuclear energy as part of the transition activities, transition in the sense of transitioning towards a green future. And essentially, nuclear energy as of January 2023 is classified as green energy in Europe. So if you think about that, just from an investment perspective, that's likely going to drive a lot of assets into kind of that space, nuclear energy, uranium as that key component within nuclear energy. And again, it's definitely something that it's picking up. Just for a little bit of extra context, here in the United States, it's expected to double the nuclear capacity just to continue to be one of those top energy solutions, again, green energy solutions that are out there.
Yeah, I think with with nuclear specifically, right? It kind of has had this bad rap, right? Because when people hear nuclear, they think of bombs, they think of
also you think of Chernobyl,
they think of Fukushima, they think of all the things that
2 Mile Island,
3 Mile Island, but in reality, nuclear is probably the cleanest energy that we have that exists out there with like hardly anything,
especially with the new reactors, right?
Correct.
I think the new reactors are just not as, you know, as dangerous, and they're also much smaller, right? So I think the reality is, you know, when you have the Russian war, and you have the weaponization of basically fossil fuels, energy, right? And you know that you can have this clean energy, you know, that you can really develop. And I think France has done a good job in Europe doing this, because I think 50% of the energy in France or more is nuclear based. While Germany was relying on a lot of energy from Russia, right? I think that's just a wake up call, right? So it becomes a national security issue.
Yeah, it's interesting, right? Because it's like you think about, obviously we know which governments hold a lot of the oil in the world, the governments that are not friendly to, you know, let's say the US and or Western allies.
Right.
But any country can be energy independent if it's wind, solar, nuclear. Like nobody needs to rely on other countries for their energy production if stuff like this goes down. And I do think, you know, as horrifying as what happened is what is happening in Ukraine right now, I think this is the seminal moment in history that we look at as the turning point of when, you know, energy dependence sort of flips. And going back to economics of all this stuff, right? Well, it's not economical, clearly, to depend on Russia, to depend on Venezuela or Saudi Arabia to be our energy producers. And now the cost of technologies, as you've talked about, Pedro, coming down, we have this confluence of events that allows the Earth to truly transition into a renewable space.
Yeah. You guys talk a lot about your small modular reactors in your thing, in your presentation. Who are some of the players? I'm going to share a slide or two here too, but who are some of the players in the space?
So let's look at the slide here. So again, first of all, important to understand that from a geographical standpoint, it's a pretty diversified space, right? You have Canada with Cameco, which is the leading company in terms of uranium mining activities. So I think that's probably one of the most important companies today that provide exposure to this theme. In Kazakhstan, there are a couple other interesting and important companies, just because, again, kind of the nature of the space is where we have a lot of these supply chain diversify around the world. So I think, you know, if you look at some of the companies, potentially the most important company today in the space is going to be Cameco, that Canadian lithium mining company.
Really? Okay.
Nice. So here's another, you know, this is from my nerdy thing. Cold fusion. Okay. Since I was a kid, I heard about this cold fusion thing. This was sort of the benchmark energy thing that the entire world has been trying to get to. And it's always been used almost as a joke.
Yeah.
Like to mock someone's like, oh, it's like figuring out cold fusion. And it turns out that we finally actually made a breakthrough in cold fusion at the end of last year. So I know we're a long ways away from using cold fusion as a real energy source. But ultimately, from what I understand, this is the cleanest, safest way to produce essentially a huge supply of energy. So do you guys have any sort of thoughts on that? Or have you guys looked at that at all?
Yeah, I think in December of last year, right? Was it December? I believe so. That you know, here in the United States, essentially found a way to effectively reproduce the power of the sun in a lab, right? And again, by using nuclear fusion, if you think about it, that could be very powerful in terms of generating enough energy capacity for the world just by relying on that type of technology. So to your point, guys, like clearly innovation is able to really solve a lot of these climate change issues. Yes, we're years away of seeing that happening, but I think we're making a lot of progress in terms of seeing many of these technologies really changing the way we address climate change solutions beyond nuclear. And I don't want to shift gears here too much, but solar and wind are expected to account for more than 90% of energy capacity additions, even including fossil fuels. during the next 10 years up to 2032. So again, 90% share of the upcoming energy or electricity capacity additions are going to come from solar and wind alone. So I think, again, we're definitely seeing these from the investment lenses, and these are sectors that really offer a lot of growth opportunities. So innovation, policy support, declining cost, energy crisis, again, to your point, really forcing companies and countries to invest in many of these technologies. So I think, really a lot of tailwinds for many of these areas.
Yeah. I mean, I installed solar panels in my house and 3 Tesla batteries. And now I have basically 2 days of full autonomy. So it's kind of really amazing how I can do that. And the government gave me a tax credit to do that. So it's kind of, it's nice to be able to do it. So there is the technology to do it, and there is a government incentive that force you to do it. So
Yeah.
And I think that's really going to be the theme over the next 5 years, is how many people can actually create this, so we don't rely as heavily on the grid, because as you said, these solar and wind energies are there, going to be huge, but also they're not as reliable. So with people having batteries in their homes,
Yeah.
they're going to be able to really kind of help the grid be more sustainable, or at least more able to sustain all these kind of ups and downs.
You could be your own country basically at this point.
I don't know about that. I live in Venice, so
you should be your own country.
Should be in my own country. Yeah.
No, but that's great. I mean, we know, solar and wind are, obviously solar is kind of the most popular of the green energies, and we know a lot of the people in that space. Obviously Tesla's part of it.
Yep.
But you have Solar Edge, you have Enphase making inverters and things like that, and
so there is a whole ecosystem around this. So, and also this whole is the underlying kind of possibilities that are happening because of materials. And I think that's really the story. The other story, and we talked about this a lot about LIT and lithium, but a lot of other materials are needed to develop all these technologies. So maybe talk a little bit about that and explain like why we need to think about some of these companies or some of these miners as really an opportunity. And I want to talk about Sweden a little bit.
Absolutely. And as I was saying before, right, like if you look at lithium, it is already like the foundational component for electric vehicle battery technology. Of course, it's also used for batteries or lithium ion batteries within consumer electronics. And these are the type of materials where, as you think about addressing the increase in adoption of many of these technologies, we're also going to see an increase in demand for many of these underlying raw materials. So, from an investment standpoint, I think we definitely need to look holistically at the supply chain of many of these technologies. If you look at EVs, I think it's important to look at the midstream market, the battery technology market, and also the upstream market. Again, lithium, in our view, probably the one a key disruptive material offering the most opportunity. And I'll just say that it's the only common denominator across every single battery technology. So if you have NMC batteries or LFP batteries or NCA batteries, you name it, lithium is the only common denominator across every single battery technology, and therefore really exposed to drive that adoption in the next few years. Actually, Albemarle yesterday, which is one of the top 3 lithium miners around the world, really showed that lithium demand is just expected to keep growing over the next 10 years or so. For context, last year, lithium demand was approximately 700 to 800,000 metric tons. That, again, was in 2022. By 2030, that number is expected to be 3.7 million metric tons. So over 5x growth just within the next 8 years. And bringing supply to market is quite challenging. Lithium supply is inelastic. It takes between 3 to 5 years to bring that to market. So that's going to allow lithium prices to remain very high for the foreseeable future. We're effectively facing a structural deficit of lithium, and therefore lithium miners are really exposed to benefit. Beyond lithium, nickel, manganese, graphene, copper, cobalt, and many of these other materials are also part not only of battery technology, but of wind turbines.
You know, I'm sharing this. I'm sharing this chart of all the metals or that's needed basically in different technologies. It's kind of crazy.
Exactly. Not only clean technologies, right? You can see here robotics, drones, semiconductors, especially now semiconductors that could see another leg of growth with all the news around ChatGPT and the computing power that's needed there. So again,
hey, you're getting ahead of yourself.
You're taking Hatem's thunder here.
Yeah. How scary? So China has basically control or basically owns a lot of these rare earth minerals. How I mean, strategically, that's obviously not a good thing. How scared or how problematic is that right now?
If you actually go down a couple slides, slide 104, you can actually see that a geographical breakdown. To your point, yes, like China is leading. China is leading in many of these materials, as you can see on the screen, right? From rare earths to zinc, graphite. China is a leading.
China and Russia, two friends.
So that's where it gets tricky. Nevertheless, I think even for things like lithium, where just for context, 55% of lithium comes from Australia or came from Australia. Over the last few months, about 35% is coming from South America, but then 70% of the lithium around the world needs to be processed in China, meaning it needs to be refined to become this specialty chemical that goes in the batteries. So a lot of that supply chain distribution around the world is really changing, right? So we're seeing here in the United States a lot of news about battery technology companies starting to build factories here. Panasonic, LG, even the Chinese companies are starting to build factories here. And I think it's really to address all of those geopolitical issues. Even the mining activity in the United States here is expected to pick up. You have companies like Lithium Americas or Piedmont Lithium here in the United States that are expected to produce lithium. In South America, you have companies like Sigma Lithium in Brazil. So a lot of that deglobalization is also happening on the disruptive materials space, as you can see on this chart.
Yeah. So the world is really changing drastically in front of us to kind of adapt to this kind of new technologies and where we need them to be, right? Like, why would they send a battery to China to be processed and then bring it back to, I don't know, Alabama to be put in a car, right? So I think that's really
money. That's the only reason. But we need a strategic. We're at a strategic disadvantage. I think even more so than EVs, which will obviously become more of an issue.
I think also permitting too, regulatory stuff.
Yeah, but you're right. But the effect, we saw it with semiconductors a lot more, right? The semiconductor industry, which is a lot more pertinent to our sort of national security and all this kind of stuff, all tied up in China and those areas. And now you have every semiconductor company building factories in the U.S.
So
speaking of that, well, great segue into the next phase of this, right?
Which is
like AI, robotics.
AI, robotics kind of come into play, right? I mean, I think ChatGPT is probably
let's throw it out there, Hatem. Let's do it.
I mean, it is the hottest story. It's the hottest story in tech. I mean, I brought it to the office last week. Everyone is using it to redo emails, redo some scripts, use it for a lot of things, and I think AI has been around for a long time. This is the first time consumers got to really use it in a way that's in a modality that it's useful to them, right? So I think that's very powerful, right? When you something you touch, use, and it's useful to you, right? Fastest growing kind of adoption of any platform, like 5 million. What was it? 5 million users, 1 million users in 5 days, right? That's nuts.
Yeah.
Right.
It took Netflix 3.5 years.
Right. Exactly. Think about that. Right. And then Microsoft puts $19 billion investments right away last week. So let's talk about that. Like, are advisors going to be gone?
I hope not.
I hope not. Right. No, it's not. But I think there is a lot of there is a lot of implications of this technology, and I don't think any of us knows
I'm
how
curious
big
to hear
this is.
Pedro's solution because I have some thoughts on this, but
Yeah.
I'm curious to hear Pedro what you guys have been talking about.
Yeah, I have a lot to say here, and
Right.
maybe more question marks than actual solutions. But because I really think that, again, we're just seeing the power of this technology, right? I believe that as a guiding framework, everything where where if we ask ourselves, where does text exist today? And you can think about legal, you can think about search, you can think about doc writing, insurance, healthcare. Anything with text could be disrupted, right? So again, search engine is a clear example of that, and why there is so much noise around kind of Google and kind of the application for search engine. Summarization could be a big use case for this technology. Customer service as well. Think about the future, writing code to build an app. You can ask the models to essentially write the code to build apps. So that could really be a very powerful solution. I think if we look at kind of more futuristic cases, if we ask ourselves, what happens when we move past just text, right? Right now it's just text. What would happen if all of a sudden we start getting actually videos from these technologies, right? So, of course, the engineering effort to process videos is a lot more complex in terms of training these models with videos. And even I think there are hardware limitations today, but say that, over the next 5 to 10 years, you could actually create videos on your own. You can tell, I want to watch a movie that has, this type of plot and it's using this type of characters. I think that dynamic personalization of content can be very powerful.
So what happens? What happens when the cost of content becomes zero? That's a really amazing world that we're gonna live in, right? I can customize everything, right? I can make movies.
Someone still has to create content.
Yeah,
it's not going to create it on its own. Like somebody, it's more of a curation than it is.
But no, look, things like DALL-E, which is also open AI, does images for you, right? So if you can create a script and just have,
I definitely think there's areas of the world that are going to be disrupted. The way I think about this is, this is not meant to replace anything we have currently. It might replace some people we have currently, frankly, right?
Yeah.
If you're a doc writer, if you're writing legal documents,
if you're a copywriter,
honestly, you're in trouble. Like if I see this tech, I go, man, I'm a little nervous.
Yeah.
But is it going to replace Netflix in content creation? Probably not. Is it going to replace Google as far as searching the web? Probably not. What it can do, in my opinion, and from talking to AI scientists and data scientists right now, language is the easiest thing to process.
Right.
It's very, very simple.
Yeah, and it's also natural language processing. Correct. That's what this is, right?
It's very simple to process. AI is still very limited. The artificial intelligence that we hear about in dystopian futuristic movies.
Westworld is not going to happen.
We're like 100 years away from that if it happens at all. AI is generally very limited. But I do see this as almost like we used to have to look up information in books. Remember that?
Yeah.
Remember when you used to have to look up you're going like, I'm gonna see the answer in here. And then we got Google, and it helped us read all the information that's out there in the world. Well, I look at ChatGPT as an enhancement to what we already have.
Yeah.
Right. We have Google, we have we have Outlook, and we have all these softwares that all are very good as they are. And now we have this to lay on top of that as something that's going to make all of our lives busier. We're all going to forget how to write, just like we all forgot how to do math. I had some conversations with people about what's 3% of a number, and it was a nightmare to try to get people to do math in their head.
Yeah,
we're all going to forget grammar. And we're going to forget how to process language also.
So because we have a lot of clients at Google, we are invested in Google. Google has a really tough week. We had antitrust yesterday from the DOJ, ChatGPT. What do you see in there? I mean, I'm
releasing 12,000 employees.
Yeah, So what do you think? Is Google in trouble?
I think Google has already trained models just as good, to be honest with you.
Yeah.
The reality is that they haven't really bring them to the masses just as OpenAI did. So I don't think there is actually a technical differentiator between these type of companies, and I would include in that mix Amazon, right? I think Amazon is also working in that type of technology. I think it has around 20 billion parameters that it's very competitive with what we're seeing today with OpenAI. I think, from an investment standpoint, that's really every time that we see a type of event or emerging technology like this, I always ask myself, like, okay, what does this mean from an investment standpoint? And I think hardware is probably going to be one of the big winners.
Yeah.
If you think about all the computing power that's needed to process all of these thousands and millions of queries and get the quality of responses that we're getting, you need so much computing power. So actually, NVIDIA could be one company that could benefit significantly. Actually, just I think a week ago, Citi analysts published a research paper on NVIDIA where they actually estimate that the company within the next 12 months could generate between $3 billion to $11 billion just from the incremental demand that ChatGPT will drive for their GPUs, right? So just for context, the GPUs being used by OpenAI are the NVIDIA's A100 semiconductors. The company's working in the next generation of semiconductors, the H100, and that could drive even more demand for the newer products. So I think hardware could really be one of the big winners here of this topic.
NVIDIA, honestly, they do such an amazing job on the hardware. They're such a sort of low-key company, which is ultimately one of the biggest companies in the world right now. But you kind of never hear about them if you're outside the investment world.
Sometimes I wish Elon was just like, sometimes.
That's what I tell people. I go, several years ago, people asked me what my two favorite companies are, and I said Tesla and NVIDIA. And I go, and they're for two very different reasons with two very different people running the company. Both hugely innovative, but two very different management styles.
Yeah, for sure.
And NVIDIA is right. It's AI. It's the data centers themselves. Right. It's as maybe ChatGPT or not that, but that kind of software enhances things like Web3, the video game, immersive metaverse experience, whatever you want to call it. Like, this is kind of what I think of it when I think of it as sort of this enhancement to all the content that's currently out there, all the stuff that we read, we see. Like, this is another way to process information and to do it in a better way.
Yeah, no, 100%. So I think going back to what you said, I'm not too worried about Google per se. I mean, Sundar is probably like, hey guys, we created.
I'm more worried about antitrust, frankly, than I am about ChatGPT.
I'm not worried about the government. It's gonna take years. Don't worry about it.
It's gonna take. It's been years.
It's been years.
We'll see.
Super amazing stuff, Pedro. We barely scratched the surface of this. I could talk to you for hours. I really could, because this stuff is super exciting. I think our job is really to not only to identify some of these opportunities for our clients and invest in them, but also really to see where the world is going somehow. So your work really helps us kind of analyze and understand some of this stuff, and also allows us to have access. Some of these companies we could not invest into, some of the materials companies, some of the, international companies, Chinese companies that we really can't have access to, but using some of your products and some of your funds has been really great for us. So thank you for sharing all your research. Thank you for coming on to talk to us, because I could look at a 380-page deck, but it's so much better to talk to you. So thank you for coming on. I'm sure we'll be talking soon. Any last thoughts, Ayal?
We didn't really get to touch much on robotics, but I feel like maybe we'll leave that till next time.
I think that's another big one, like
with AI plus robotics together. I think is another huge leg for our economy, right? And whether Elon really delivers on Optimus, I think we're getting there. I think last year, what was it? I think it was Amazon. Like they're talking about breakthroughs in like technologies of, it sounds like something so ridiculous and simple as like grabbing something like a normal human hand would grab. It sounds so simple, but it's one of the most difficult tasks for a robot to perform.
Right.
And apparently we're there now.
Okay.
So the addition of having AI plus robotics that can function more like humans.
Right.
So, and do the tasks, right? If you're a copywriter, you're worried about ChatGPT. If you're a warehouse worker, you're worried about, robotics plus AI doing your job. So we've been, robotics is not a new thing, right? We've kind of been building robots since the 70s, really. But, today, if you look at an Amazon workshop, like a warehouse, it looks like a future city.
I'm scared.
Yeah,
the movie Her just comes to mind.
Don't worry, you're fine. We're way off from that. If anything, you'll be really old when that happens.
Right. Okay, good. Good. Well, we'll have to come back and talk about robotics, because this is also something that I don't know a lot about, and maybe we can talk. We'd
love to nerd out with you, Pedro. This is stuff that gets us very excited, and maybe we are huge nerds, but we love it.
Yeah.
No, thank you so much for having me, guys. Always a pleasure to chat about everything that's happening around the world around innovation, emerging technology. So I already have a placeholder for next year in my calendar. But if you need me earlier, happy to come to join you guys.
Thank you, buddy, and hopefully this year will be much better.
2023 is gonna be better for all of us.
Yeah. Cheers, mate.
All right. Thanks, guys.
Okay. Bye.